Welcome, everyone, to the Australian Bitcoin podcast. I'm Justin, your host, and today I'm joined by Zoe from SMSFWarehouse.com.au to discuss buying and holding Bitcoin in a self-managed superannuation fund. But before we start, a quick word from our sponsor. The Australian Bitcoin podcast is brought to you by Hardblock.com.au, Australia's first and oldest Bitcoin-only exchange. Hardblock aims to help their users save in hard money and to become self-sovereign Bitcoiners. Hardblock has no added fees on deposit, buy, or sell transactions, so the prices are what you see or what you get. Sign up to Hardblock today using the discount link in the description below to receive free auto-send batched Bitcoin withdrawals for 6 months. All right, Zoe, how's it going?
I'm good, thank you. How are you?
I'm good, thank you. And thanks for taking the time to come on the podcast today. This is a topic that a lot of Bitcoiners tend to ask us about and ask each other about. So it's nice to get a professional on board to, just discuss some of the nuance. So for people listening, could you perhaps just give a bit of your own personal and professional background after having joined Superannuation Warehouse, just in regards to, I guess your qualifications and what you do there?
Yeah, sure. So my name is Zoe. I'm from Superannuation Warehouse. So I work as the accountant and auditor in this company. So I have a Master of Accounting degree myself and just passed the ASIC register SMSF auditor exam. So I want to introduce our company a little bit. So we are a Melbourne-based company with clients throughout the whole Australia. We specialize in SMSFs, and so we deliver very comprehensive range of SMSF services, from setting up new SMSFs, carrying out all the accounting, tax, and auditing services, and right through to the wind-ups of the self-managed super fund if required by the trustee.
That's great. And what is the uptake like at the moment for people either setting up self-managed super funds for the purpose of buying and holding Bitcoin, or even trying to, convert an existing superannuation fund to be able to accept Bitcoin? Like, is there an increase? Like, what's the trend there at the moment? If you can talk about that, I guess.
Yeah, I would say it's definitely an emerging industry. So more and more people will consider to choose to have their own option to save their money for retirement. And so we get new clients like every week. I would say the industry is definitely emerging.
Yeah, that's good to hear. That's my understanding of it as well. The amount of queries we're getting around self-managed super funds, and I've also gone down that process personally myself around a year or so ago. Well, I guess for anyone who's not totally aware of what a self-managed super fund is, I prepared a definition, which I've just gleaned from a few other places. So I might just read that out and let me know if there's any other nuance to add here.
Yeah,
so
sure.
A self-managed super fund, which I'll probably try to start calling SMSF because it makes it a bit easier than repeating those words over and over. But a self-managed super fund is a private superannuation fund that you manage yourself. So SMSFs are different to, say, industry or usual retail superannuation funds. For example, because you will manage your own super, the money that you would normally put into, say, like a retail or industry super fund, you would put into your own self-managed super fund. So you can then choose what investments and what insurances the self-managed super fund might hold. And by going with a SMSF, you have a bit more flexibility in terms of what kind of assets you may hold. For example, you might put things like cryptocurrencies, specifically Bitcoin, or you might even put things like precious metals or even property, things that might not be as easy to buy in a standard retail or industry superannuation fund.
Yes.
Does that sound about right?
Yes, that definition is very correct. So self-managed super fund gives the trustees the freedom or the flexibility to choose the investment that they want to use to save their money for retirement. And with more and more compliance requirements by the regulators, this is a little bit different from the normal investment, you use your after-tax money to invest in shares, and this will also secure the money for your retirement after many years.
That's true. That's a good point. And you mentioned there that there's some additional kind of regulatory requirements with self-managed super funds, which I'm thinking things like the sole purpose test, where it needs to be quite different to your personal money. we'll probably get into that maybe in a bit more detail a little bit later on, because I do have a point around just operating the fund and, during audit time, what things to consider. But I guess that's something for people to keep in mind too, is there is a bit more regulatory requirements and rigor that they might need to go through in terms of managing their own self-managed super fund versus just having the stock standard fund that they might get through their usual employment.
Yes.
Good point.
Yeah.
All right. Well, to make this really practical for people, what I want to do is just talk through my own personal experience setting up a self-managed super fund recently as like a bit of a walkthrough. And in doing that, we can then talk a little bit about what are the other options that I could have taken. And we've got some queries from customers and just general members of the community that I'll sprinkle throughout that as well for people to be aware of.
Yeah.
So I guess the very first step, obviously, would be choosing a self-managed super fund. I've just called them an administrator. So this could be an accountant who operates with self-managed superannuation funds, or it could be an organization such as yourself, Superannuation Warehouse.
Yeah.
And at Hardblock, we're suggesting customers use like a known source. So we're suggesting people use Superannuation Warehouse as their go-to. That's where we have a little bit of experience. You're coming on the show and giving some information to customers as well. So generally, people are a bit confused about where they could go. There are a lot of organizations available, as well as normal accountants. But yeah, we're suggesting to going with Self-Managed Superannuation Warehouse. Is there any nuance people need to be aware of when choosing a self-managed super fund administrator, apart from what I've just mentioned?
Yeah, you mentioned a good point. So when the trustee consider what kind of administrator they would like to use to help to manage their self-managed super fund, they need to consider many things such as their budget and their level of knowledge regarding to self-managed super fund, and the time and the effort that they would like to dedicate to manage their self-managed super fund. So as you say, so there are typically two options for trustees, either to choose with the normal accountant. So most people will go to their personal accountant, as they know they are familiar with their personal tax affairs, so which they can use to manage their self-managed super fund. But they need to acknowledge that there are many specific and complicated compliance requirements when managing the self-managed super fund. So the normal accountant may not be aware of those compliance, which may give them some risk of some breach of the compliance. And so another choice is like to choose some accounting firm like us who specialize in self-managed super funds. So we are very familiar with all the process when managing the self-managed super funds and all the compliance requirement. So that will make all the process much simpler to the trustees. And another thing they need to consider is what kind of investment they would like to have in their fund. They need to be aware of that some of the accounting firm, they limited the investment they can have in the fund. For Superannuation Warehouse, we don't limit any investment they can choose, and the whole process our company uses is fairly simple and straightforward. We use online process. We have a very reasonable and transparent price as well.
I think those are all very good points. I ended up going with my personal accountant purely because he knew my, I guess, just my personal taxes, my business taxes. So it seemed like a good step. Having said that, he's clearly doesn't have as much information available to him around things like Bitcoin and cryptocurrencies compared to, say, yourselves. So I think that is a very good learning in my own personal process. It's made the audit process at the end of year to come with various delays and kind of both needing to explain and re-explain things to each other about kind of where Bitcoin is and how you custody it and how you can prove that. So I kind of take your point there that going with say a self-managed super fund specialist that doesn't have limitations on the type of investments you can have, but also has, I guess, that specialist knowledge to make the process a bit easier at a cost affordable rate is really important.
Yes.
Is it possible to, because this is a query that's come up, is it possible to change who manages or audits your self-managed superannuation fund if there's any difficulties in the first year of operation?
Yeah, they definitely can change their administrator. So like what I said, it's trustees' decision on what administrator they want to use, and even whether they want to use an administrator or not. It's very, we are very familiar with the process of taking on existing self-managed super fund from other accountants. So we usually have a lot of clients have the request to us to take on their funds. So the cost that we take on the existing fund is $475. So this would allow us to contact the previous accountant for any ethical issues and retrieve all the legal document and financial data, and to add the fund on our tax agent license. So the process is very simple and straightforward. Yeah, so that's about it. Yeah, that's about the process.
That's great. And look, you just raised a good point there as well in terms of costs. So in terms of Superannuation Warehouse's costs, are they all available on the website pretty clearly delineated, or is it worth maybe mentioning some of them now? You just mentioned the one of if you're taking on an existing self-managed super fund, but obviously each year there's like an audit cost, there might be administration cost, there might be setup costs. Are those things kind of clearly displayed on the website, or is it worth perhaps mentioning a few of them now if you have that information available?
Yes, I would say our fee is very transparent. You can find out all the information on our website. Like what I said, we do an online process. So also we really frequently use the info on our website as well. If you check on the superannuationwarehouse.com.au, you can find a lot of useful information about self-managed super fund and all the cost for us to manage your fund. You can find on the website as well.
That's great. So I guess moving on to the next step, assuming people have chosen who they want to say help set up their fund and perhaps even administer their fund. What happens, or at least what happened in my process, was my accountant kind of collected the required details. He did most of this via email. So obviously got my name, the other trustee's name, which happened to be my partner, our date of births, our addresses, our tax file numbers. He queried how he'd like to use the fund. So like what other investments would I like to make in the fund apart from, say, just Bitcoin? And then he kind of walked me through completing the documentation. So mentioning that we need to establish a deed to even set up or establish the self-managed super fund in a legal way, firstly. We needed to complete forms to appoint the two trustees, and we needed a formal fund investment strategy document as well. So that's the process that I went through. I'm aware that as a little bit of nuance here, or another option is that, so I've set it up as an individual or two individuals. Technically, you could have more than two individuals, but you can't have less than two individuals unless you set up, is it like a company or a corporation, and manage it through that way instead. Do I have that kind of correct?
Yes, that's true. So since you mentioned the structure of the fund, yeah, I would say it's very important before you set up your own self-managed super fund. You need to consider what kind of structure is suitable for you. So like what you just said, if you want to set up a self-managed super fund with individual trustees, you would need to have at least two trustees in your fund, because that's the definition of fund. Then you can have up to 6 members and 6 trustee in your fund as well. And that means the trustee's role is to manage the fund. So any decision made in your fund will need to have two trustees cooperations. So another option is to set up a corporate trustee, what we call. So that means you need to set up a company who act as the trustee of your fund. And then it will allow you to be the sole member and the sole director of the company. And so that means you can manage your fund yourself. You don't need to consult with other people's opinions. Another advantage of having a corporate trustee is that because the company acts as the trustee of the fund, so all the liabilities will limited to the company. And also there are certain circumstances that for example, if the trustee would like to have a loan from most of the bank or lenders, they will require the self-managed super fund to have a corporate trustee in their fund. Yeah, does that make sense?
Yes, it does, absolutely. So it gives you some additional protections of kind of isolating things to the corporation. It gives you, I guess, a little bit more flexibility of not needing to have additional members, so you can make the choices yourself. And also what you mentioned just there, if you say wanted to get a loan for the self-managed super fund, banks will require you to have that corporate trustee anyway.
Yes, most of the bank will require that. Yeah.
Gotcha. And is it possible to add a corporate trustee after the fact if you've already set it up as individual trustees?
Yeah, absolutely. So if you set up the fund initially with individual trustee, you can make the change of structure of your fund. So you can always set up a company and change the structure, and also you need to variate the trust deed for your fund. So for that part, sorry. Do I need to mention the cost?
Yeah, actually, I was about to say that was a point I was going to bring up, is that we've talked about the benefits, but there was an additional cost to setting up a corporate trustee compared to no additional cost, I guess, of setting up the individual trustees. So yeah, what is the cost?
Yes, sure. So initially, if you would like to set up a corporate trustee structure of your self-managed super fund with Superannuation Warehouse, we charge us $1,300 with the corporate trustee structure. And if you would like to choose if you want to go for the individual trustee structure, we charge us $350. So there's very interesting is if you would like to set up an individual trustee structure at the beginning and you decide to change the structure to corporate trustee, so we charge a fee of $950 to set up the corporate trustee structure and change the structure for your fund, and this fee will be tax deductible in your fund. But if you set up so the setup fee at the beginning won't be tax deductible.
Gotcha. That makes sense. So yeah, if people have set up individual trustees and then want to convert, that extra fee, that $950, is tax deductible. And interestingly, that would end up being a little bit less in total compared to just setting it up with a corporate trustee to begin with. If I'm doing that maths correctly, $1,300 versus $950 plus $300, just a slightly less amount, and also part of it's tax deductible. Good to keep in mind.
Yes. The total amount and to either set up with a corporate trustee at the beginning or either set up later would be no different. So it's either
about the same.
Yeah, $1,300 at the beginning or $350 and $950 later. It's the total amount will be no different, but the $950 when you convert your structure to corporate trustee will be tax deductible in your fund.
Gotcha. That makes sense. Sorry, to begin with, I thought it was $300 for individuals. So I was thinking, you get a $50 less if you do it later on. But yeah, that makes more sense for it to be about the same.
Right,
but at least one portion is tax deductible, which works quite well.
Yes.
So a query that we often get is after a fund is established, so let's assume that people have chosen whether they're going corporate trustee or individual, they've given all the right details that they need, they've chosen their investment strategy. People sometimes ask, are we allowed to change our investment strategy? So say if they've set up a self-managed superannuation fund and haven't put any kind of allowance in there for cryptocurrencies or Bitcoin and said, now we want to add something to the deed, is that possible to do? Is it possible to change that investment strategy and add something brand new to it?
Yes, absolutely. So actually, the regulation actually requires the trustee in a self-managed super fund to review the investment strategy regularly. So our process in my company is we will ask our trustee to review the investment strategy annually when we do the year-end accounting. So that's the point that you can consider updating your investment strategy, or anytime you think you decide to add a new investment in your fund, you can update your investment strategy as well. So the point of an investment strategy is that it's a document for trustee to state what kind of investment they would like to have in their fund, and to acknowledge that trustee has considered the risk and the diversification requirement and the insurance requirement in the document. So our way to ask our trustee to update the investment strategy is to give them a Word version of template, which allow them to give us a quick update by editing the investment in the template. So it's a fairly easy and straightforward process, I would say.
Definitely. I think anything that can be templatized in some way and just sort of follow the bouncing ball in terms of going through a document, I think that makes people's jobs a lot easier, especially if they're new to things like superannuation, manage their own fund, that kind of thing.
Yes, right.
Another query that's come up, which was quite specific. So we had a customer who has set up a self-managed superannuation fund with a SMSF administrator, and in their fund strategy, it's indicated that they can only buy cryptocurrencies from a specific exchange. That sounds a bit, I guess, very different to the process that I went through, where we had an allowance for buying cryptocurrencies. It's really only Bitcoin that I'm buying, but there's a pretty broad allowance in there. But it never stipulated which exchanges I have to go to. Whereas this particular client is mentioning that it's written into his fund, he's only allowed to use a certain exchange. I guess I've sort of got a two-part question. Firstly, is that normal? And secondly, can that part be changed? Can not like the allocation amount or the percentage, but rather where it comes from, like which exchange you buy from, can that be removed from the strategy as well?
Yeah, that doesn't sound very normal, as we don't in our company we don't limit our clients to which investment they need to have, or what kind of platform or trading company that they should use in their fund. So, like what I said, the point of the meaning of SMSF is that the trustee can have their own decision on what kind of investment they want to save for their retirement. So the ATO doesn't have any restriction on the investment or even the exchange platform they have to use in their fund. So I would say it's not very normal, but I think it's like what I said, there are some companies that did restrict their clients to use certain platform in their fund. I think it's just for their business purpose. So regarding how to, like, if you can change it, whether you can change the exchange platform you use or not, yeah, that's the answer is absolutely you can change the platform. But if you mention what kind of platform that you use in your investment strategy, you need to make sure when you're changing the platform, you need to update it on your investment strategy as well. So you need to make sure that all the investment in your fund are allowed in the trust deed and the investment strategy.
That makes a lot of sense. So I guess the take-home points there is that it's not totally normal for that to happen, but it really depends on who the self-managed super fund administrator is, because sometimes they do limit the offerings of either the type of investment or perhaps the platform it can be bought from. And I guess if this particular client was keen to change that, he might need to consider a different self-managed superannuation fund administrator with less of those restrictions. And also, like you said, to make sure that that's updated in the fund strategy to remove that stipulation about what exchange it needs to come from. Yeah, that's a good point. So a query that we get around self-managed superannuation fund strategies as well is, how can you justify, or is it possible to justify, a majority holding of Bitcoin? Some people have even said they want to set it up where it only holds Bitcoin. So the parts that I'm aware of here is that there is a diversification obligation for self-managed superannuation funds, which means you don't necessarily have to have a diversified fund, but you absolutely need to consider the risks of not diversifying. And so my understanding here is some of the risks of not being diversified. Say if we go with a really extreme example and people buy a property and the only thing that their self-managed superannuation fund holds is a property like a house. You know, properties are relatively illiquid. You know, you don't sell them very quickly if you do decide to sell them, perhaps if you need to cover costs or fees or to cover trustee payments or something along those lines. You also can't sell very small amounts of property. You have to sell the whole thing or nothing at all. And so I think in that extreme example, there is a lot of risks to someone, say, just buying a property with their self-managed superannuation fund, because it's hard to kind of rotate in and out if need be. Whereas, say, something like Bitcoin, people could actually perhaps make the argument that you can sell, you know, as down to small as 1 cent if you really wanted to, and if you needed to cover fees. The market is quite liquid, probably for the quantities of Bitcoin that people would be putting in there as well. And therefore, it wouldn't ever impact your ability to cover costs. I guess other things people could keep in mind are things like the ages of the trustees. So if they're relatively young, an argument could be made perhaps that they're willing to have additional risk in their self-managed superannuation fund, knowing that they're quite away from retirement. And yeah, I just wonder, is my explanation there, is that kind of making sense in terms of like rules and laws and regulations for self-managed superannuation fund? What's your opinion on people putting in like a very large majority holding in Bitcoin or even a full amount of Bitcoin? Is it even possible? And if so, how do they justify it?
Yeah, I think your comment is very accurate, that the ATO doesn't really restrict the trustee to have a single asset class in their fund or not, or they don't really force them to diversify their investment in the fund. But they need to consider the diversification of the investment in the fund and the risk of not having the diversification. So yes, like you said, and they need to consider the operational cost in their fund. So that means they need to have sort of some sort of a cash flow in their fund to pay for certain cost. And they also need to consider the age of the trustee. Whether they when they will meet the condition of release to the retirement.
That makes sense. And so have you seen, if this is something that you can disclose in an anonymous type way, funds that have come through Superannuation Warehouse that have had an allocation to cryptocurrencies, up to 80 or 90%? Have you seen something like that in practice, or is this more of just like a theoretical thing that we know is possible and justifiable, but maybe it doesn't happen that often?
Yes, I would say definitely possible. I've seen some of the clients putting a majority of their fund in cryptos, or like you, the example you just made, putting the majority of money in property and keep some cash aside for the operational purpose and expenses for the investment. So that's definitely very common cases when managing self-managed super fund.
That's good to hear. That's my personal experience as well. I haven't had any problem justifying that, but I have heard a lot of, I guess, fears in the community, people believing that they have to have, if they're going to have, say, something like Bitcoin, they can only have up to about 10 or 20%, and the rest of it still needs to be stocks or cash deposits or bonds or those sort of things, which was not my understanding at all, but it's just good to clarify that. So thank you.
Yeah, so the point of the self-managed super fund is that the trustee can have the flexibility to choose what kind of investment they would like to have in the investing their super. So there's not like ATO don't have a big restriction on what kind of investment they have to have in their fund.
That's good to know. All right, so I guess moving on to the next point of this this walkthrough, this process. Let's assume people have chosen an SMSF administrator or someone to help set up their fund. They've chosen whether they're going with individual trustees or a corporate trustee. They've provided all the details. They have chosen their investment strategy, at least their initial one. And now the steps that I went through after that was setting up a separate self-managed superannuation fund bank account, one that wasn't associated with my individual identity, but rather was set up in the name of the fund using the fund's tax file number. And my fund has an Australian business number as well, which I had to use for that. So that's a pretty straightforward process, I guess. I'm assuming most major banks will offer bank accounts that are applicable for self-managed superannuation funds. I just went with CommBank. They had a cash deposit, or it's called like a CDIA, and that was easy enough to do. I was able to sign up within about 20 or 30 minutes online. Are there particular banks that Superannuation Warehouse recommends or suggests, or just has the easiest process with?
Our clients can have their own options on what kind of bank they would like to go for. But our process is like we give our trustees option to set up a Macquarie cash management account, and we can help with the application of the bank account for free for them. So then it will be a very simple process for them. So they just need to they will basically receive an email from the Macquarie bank account and just complete the application, give the authority, and the bank account. We basically just set up the bank account for them. But like what I said, they have the freedom on what kind of bank account they would like to use. Just need to make sure the bank account need to be set up and the fund's name and need to be separate from their personal bank account and other credit cards or something like that.
That makes a lot of sense. Does Macquarie bank accounts, are they linked in with any kind of sort of shares or trading platform? The reason I ask is the CommBank one is hooked in pretty easily with the CommSec account. I don't hold a whole lot of shares, but I did want the ability to be able to do that in a pretty easy way with my self-managed superannuation fund too. So having both of those kind of linked together, the bank account and the share trading account, made that easy. I'm not really familiar with Macquarie Bank too much, but do they have something similar to that, or a relatively easy step to link a share trading account with that too?
Yes, so Macquarie Bank is very similar to the Commonwealth one. So they have their own trading account, which is called online trading. So normally if the trustee requires it, we will set it up all together for them as well. So the trading account will link to their cash management account. So as far as I know that if you have a Macquarie cash account, you can also link it to other trading accounts. But I think more what sort of platform you can use, it depends on Macquarie's policy.
That makes sense, but I'd assume most of them are relatively comparable if it's a share trading account. But just good to know that there's an option there for people as well if they went with Macquarie. So the next step for me after setting up a bank account, which would then allow me to roll over my superannuation fund in it, as in my existing one, but I'll get to that in just a second. The next thing I did was I set up an exchange account. So I've set up an account with Hardblock. It was as simple as, because I already had a personal account with them, is just setting up a separate account with a different email address and then contacting Hardblock. And they, behind the scenes, give me an extra form that says you need to provide all your self-managed superannuation fund details on this form. And then they go and update my account behind the scenes to make it quite clear that it's a self-managed superannuation fund exchange account, quite separate to my personal exchange account with them. Is there any nuances there that are good to keep in mind when undertaking that process, apart from just making sure that it's very clear that this is a exchange account for the fund in particular, not yourself personally?
Yes, so I would say setting up a Bitcoin exchange account would be similar to setting up a bank account. So just need to make sure it's under the fund's name and don't mix that with your personal assets. And when setting up a trading account, they might require a certified trustee or other documents, and even sometimes they require a content letter to confirm the structure of the fund. So we provide that service free of charge. We can certify the trustee for our clients and provide a content letter to confirm certain details that required in setting up the account.
Excellent. That's good to know. The steps after that I took were, I kind of alluded to it just before, is rolling over my existing superannuation fund into my self-managed superannuation fund. So the process there was just requesting a form from my existing superannuation fund. It wasn't made available on the website publicly. I found interesting. You have to contact them specifically to get it. And then going through the process, there was a few forms there. I needed to verify my identity a couple of times. They use snail mail, so you have to send it in and then you wait a couple of weeks. They then liquidate the account and then roll over the amount that I disclosed, which was the full amount, into my self-managed superannuation fund. So I assume that's probably going to be very similar for most people, depending on what they have set up already. I know a lot of people have a scattering of superannuation funds, perhaps from various different employments, and this might be a good opportunity to consolidate those things if they haven't done so already. Yeah, is there any other points people need to consider when rolling over their existing super into the self-managed superannuation fund, if they choose to do that? Because they don't have to. They can keep separate funds if they wanted to.
Yes, right. So a thing that I need to mention that is after you set up and initiate the setup of your fund, you need to there will be a waiting time before the ATO register your fund as complying. So that processing time normally will be up to 28 business days, depending on how long that ATO need to process the fund. So after the fund is registered, you can initiate the rollover, like you said. Some of the retail fund, they provide a very easy process to transfer the benefit, but some other funds you probably need to provide them a rollover benefit statement and to initiate the rollover. So on the superannuationwarehouse.com.au, we provide a page and also a template of the rollover statement that you can use. It's a standard version from the ATO. You can basically just download that template, fill it up, and then send it to your retail or industry fund. And we also provide a guidance on how to do the whole process. So another thing need to be mentioned is that there's a new requirement for the ESA when you transfer the benefit between self-managed super fund and the other retail and industry fund. Have you ever heard of the ESA?
No, I don't think so. What is that?
So ESA, that means that's called electronic service address. It's basically like an electronic code that the ATO uses to verify the details of your fund when you transfer the funds between self-managed super fund and other retail fund. So now they require that if you want to roll over any funds, so you need to register an ESA. So what our process is that after we set up the fund, we will register our client's fund with an ESA company called Worker SMSF. So we will register it for free for them, but the ESA company will charge a fee, which is very nominal fee. It's cost like $39.95, excluding GST per annum. So that will allow you roll over the funds between SMSFs or other retail funds, and also it will be required when you do the employer contribution as well.
Gotcha. And so what is the benefit of an ESA? That sounds like it's something relatively new. Is it just to help identify the funds more specifically to then make the rollover process easier? Or what's the benefit of it?
It's not like benefit, it's a requirement by the ATO. So now,
I like the way you put that.
So probably because when you start the rollover with the fund, it's still not, it wasn't a requirement by the ATO, but now they require this. So if now you don't have a ESA in your fund, you can't transfer the money between your retail fund and self-managed super fund.
Interesting. Yeah. I guess a new point here to introduce is if you're making a brand new contribution. So some users might decide to either not roll over an existing fund into the self-managed super fund, or I guess they might decide to do that. And in addition, they might put in some new money as well, which is a new contribution. What is the process there? Because I imagine it's slightly different. You need to disclose that you're going to make a contribution. That way, when it gets to the end of financial year reporting, there's like a clear delineation that this is money that you're putting in, not from another super fund, but it's from your own personal account after tax. Therefore, you need some sort of tax benefit from it. Yeah. How does that work exactly?
Yes, so that's we call it personal concessional contributions. So that means you have your after-tax money in your personal account and you want to contribute it to your self-managed super fund, and it will be it's trustees' decision to whether they would like to just contribute a non-concessional or just concessional, which means it will be taxed in the fund by 15%. And then they can claim a tax deduction in their personal tax return. So we will require them to fill up a form called intend to claim and tax deduction in their personal tax. So in the form, you need to provide us like how much is the concessional contribution you would like to claim in your personal tax. And we will require that form, and you will also need to provide that form to your personal accountant. And so they will deduct the tax from your personal tax account accordingly.
That makes sense. I guess as just a question off the top of my head here, do you also at Superannuation Warehouse do personal accounting services to say if people want to just like a one-stop shop, someone who's aware of all of their sort of comings and goings in terms of self-managed super fund or personal finances and taxes? Like, is it possible to do that, or do you just focus on superannuation funds?
Yeah, unfortunately, we don't do personal tax for our clients. We want to specialize in the SMSF industry, and we focus on it as well.
That makes sense. And either way, it sounds like whatever forms, whatever reports are required to then provide to an accountant at the end of year, that's already done anyway through your management of the self-managed superannuation fund for clients. So that's still good.
Yes.
I guess another point here, or another step here that I would take after rolling over the existing funds, after they've arrived, I went through a process of planning, like how was I intending to custody the Bitcoin? So was I going to keep it on an exchange, or was I going to actually put it in, say, like a hardware wallet myself? So that's something for users to consider. I looked at this in terms of risk. So I don't want to have an exchange holding Bitcoin because there is a counterparty risk. Exchanges holding things like Bitcoin are not quite the same as a bank holding money, in the sense that they're not insured for that Bitcoin. So if that gets lost or hacked or stolen, or the exchange goes bankrupt or something along those lines, there isn't the assurances, from my understanding, that your Bitcoin amount would then be returned to you. So there is a bit of a third-party risk with keeping it on an exchange, although perhaps that might make some of the reporting requirements a bit easier, because you can just get, say, a report from the exchange at the end of financial year about how much Bitcoin you hold. It verifies that. It says how much it's worth, etc. I went with putting it in a hardware wallet instead, which means I'm self-custodying it. In my mind, that's more secure, but then that means that I do need to keep more rigorous records, as well as prove at the end of financial year reporting and auditing phase that I still have custody of that Bitcoin. So that's just a point for people to consider some of the pros and cons in regards to, after they buy some Bitcoin, where do they want to keep it? Are they keeping it themselves? Is the exchange keeping it for them? Or are they even using another type of third-party custody service, which is sort of starting to pop up around the place? I'm not sure if you have anything to add there, but I guess it's just a point that people need to consider. Like, how are they going to store their Bitcoin? Where are they going to store it? And what are the pros and cons of each?
Yes, you're right. So they need to consider the risk of what way they want to hold their cryptos. So, like what you said, probably holding in cryptos in an offline wallet will reduce the risk of cyber attacks, and that will make them lose their Bitcoins. But they also need to consider the procedure or the plan that how they secure their Bitcoin in the cold wallet as well. So we actually have many clients that hold their have a cold wallet for their Bitcoins, but which is very funny that we have a client who lost the USB and the password of to access the Bitcoin in their wallet. That can be a big risk as well.
Absolutely. I think we have other podcast episodes that talk about the kind of hardware wallets that you might consider, as well as how to back those things up, because it's really important to not just have it on the hardware wallet. You should be having, say, your seed phrase, and if you use a passphrase as well, written down or pressed into steel or put in an encrypted vault somewhere if you're storing it. Preferably not actually online, but storing it, say, on another USB. I guess the point here is, like, have backups. Don't just have it in the cold storage device and just assume that's going to be fine, because you could lose that. You could drop it in water. It could be compromised in some sort of way. So you want to have backups. Yeah, it's a very good point.
Yeah.
And again, something for people to consider. Having an exchange manage it for you does take away some of that self risk. But then, of course, you're trusting the third party that they're not going to have a mishap with it as well. Whereas you take it on board yourself, you kind of only have yourself to blame. But at the same time, you need to be very careful about the protocol of how you secure it. I guess the other things here were buying Bitcoin from an exchange, making sure you keep a record of it, as well as if you do self-custody your Bitcoin and you withdraw it from the exchange, to also keep a record of that, as in, when did you buy, how much, in terms of Bitcoin denomination, as well as what was the Bitcoin price at the time, as well as time and date would be good as well, in terms of both when you buy or if you sell, or when you withdraw. And so having an exchange that will provide statements to that effect makes that process much easier. Which Hardblock, we can do email statements per transaction or every month or financial year. You can also just go in and download a spreadsheet that explains your statements in terms of buy, sells, and withdrawals as well.
Yeah, that's true. So from an auditor's perspective, so they will require the records of any transaction when you when you buy or dispose, even transfer the cryptos. So and trustees need to make sure that they keep the records for up to 5 years for all the transactions associated with acquiring, holding, and disposing of the cryptocurrencies. And another thing I want to add up is having an exchange platform that provides you end of year and end of financial year statements. It's much easier for trustees, because the auditor will require the market valuation of the bitcoins or other cryptos that you hold in the fund at the year end, and it must be evaluated at the market rate.
Absolutely. That is a very good point, actually, because say if someone self-custodies their Bitcoin, then of course the exchange wouldn't be able to provide a statement to that effect at the end of the year, because the exchange no longer holds the Bitcoin for that particular customer. So what is done? I personally just went through the audit process, and all I did was take the price from a very prominent exchange at the close of business at the end of financial year, and multiplied that by the amount of Bitcoin that I had to get the total. And that was accepted. That was put into to the auditor's report. Is there a better way to do that? I'm guessing when someone self-custodies, what is the process there? Because they can't really get the exchange to verify their Bitcoin value, because the exchange no longer has it, if that makes sense.
Yes. So regarding the audit process of Bitcoins, so their auditor basically want to confirm three things. So one is the ownership, that the fund has the legally enforceable ownership over the cryptos they hold. So for that part, so basically if they can provide a screenshot or PDF version of the wallet, and it can show the wallet is under the fund's name, so it will be sufficient for the audit process. If they cannot provide such proof, auditor may require them to have a statutory declaration to confirm that the wallet is solely and wholly used by the self-managed super fund. So that's for the ownership part. Another thing is that they need to make sure that the wallet is not mixed up with the other assets, such as personal held cryptos. So for that part, so the auditor in our company normally will check the Bitcoin address and to reconcile the Bitcoin address from the exchange trading and transfer history to the wallet, the statement out of the wallet. So we want to make sure that every single crypto that you transfer from your exchange trading account held by the SMSF will be received in the wallet held by the SMSF as well. So let's make sure that everything in the SMSF are kept in the SMSF as well.
That makes sense. So yeah, there's probably a few good points there in terms of that sole purpose test. So making sure that if you have a cold wallet or like a hardware wallet for your self-managed super fund Bitcoin, you use a separate hardware wallet, and a hardware wallet that is bought probably even better with a self-managed super fund, I guess, cash or funds. You don't want to be using your personal hardware wallet. You want to have it quite separate, as well as similar to having like a separate bank account, a separate exchange account. So keeping that clear delineation.
Yes.
And I guess the other important points there were, if you've withdrawn from the exchange, to make it very clear where that's gone. So what receiving address is it in? And either providing, like you said, a screenshot of the wallet itself to prove that it's there, or I guess because Bitcoin is a public, transparent blockchain, what I did was I just provided a few blockchain explorers, which are publicly verifiable, that includes the receiving address that I withdrew my Bitcoin to. So it's quite clear, this is how much I bought, this is when I withdrawn from the exchange, which is verifiable with exchange statements, and then here's a public blockchain entry that proves that that's the case.
Yes. So many clients make mistakes of mixing their personal cryptos with the crypto they held by the fund. So we recently have a case that the client so they set up the personal trading account on an exchange platform when they didn't allow to set up a self-managed super fund account. So then they purchased some crypto, and then once the website allow them to set up a funds account. They set up a funds account, but then they transfer the crypto from their personal to the self-managed super funds trading account. So this is a case that the auditor may raise queries and may qualify the report. And the trustee was arguing about if they can treat it as a contribution into the self-managed account, but it's not allowed because you can't make in-species contribution in the format of crypto into your account. So what you can do is you can dispose the crypto in your personal account and transfer the cash into your SMSF, and then purchase crypto in your funds trading account.
Yes, that makes sense. So like selling your personal crypto and then making like a concessional or non-concessional contribution to the self-managed super fund, and then turning it back to whatever. I say crypto and people are going to probably have a go at me, so I'll just say Bitcoin instead.
Yeah.
I'm not sure if you're aware of the distinction between the two. Maybe I'll ask you that towards the end, your own personal opinion on Bitcoin or crypto, but I'll leave that there for now. But yeah, very good point. Like you can't mix the two together. They need to be quite distinctly separate. Yeah. Self-managed super fund and personal funds, whether it's crypto or cash. Yeah. I had a query. I guess not totally important, but more a personal interest. So when it comes to verifying the ownership of, say, Bitcoin at the end of year audit report, I was curious how this would be done. So initially my accountant said, look, they might just get you to take a picture of your hardware wallet, which doesn't make any sense for anyone who knows anything about hardware wallets, because you could just buy a hardware wallet and not actually have any Bitcoin in it. And of course, the Bitcoin's not actually in it. It's a bit more technical, but taking a photo of the hardware wallet doesn't prove anything. Yeah. I would say even what you mentioned there of taking a screenshot of a wallet, to me, that's very easily forgeable. That doesn't really prove a whole lot, but I understand if that's what the requirement is, that's fair enough. What the auditor ended up asking me to do was to provide my receiving address and then to provide the public key which corresponds to that receiving address. So the public key would have been something that's secret because that's not easily derived. Like you can't take the receiving address and derive the public key, but you can take the public key and derive the receiving address. So this is a way for me to prove that I have something that no one else does about that receiving address, without, of course, providing the private key, which would then give ownership to the auditor of my Bitcoin. So they essentially just got me to prove that I had the public key. What I'm curious about is, do auditors know how to then derive the receiving address from the public key? Like, is there a software or an application that auditors use as a standard process to be able to derive receiving addresses from the public key? I'm sorry if that's getting technical, but does that make sense, my question?
Yes. So our process is normally like so probably the easiest way is that the client can provide us the receiving address in their wallet, and we will reconcile with their trading account. Or another way we do is like we will require the trustee to provide us a statutory declaration to declare that the wallet is solely held by the fund.
Gotcha. So it's more like it's a trust system, obviously, and a statutory declaration. If you lie on that, I think it's like a 2-year or 3-year prison sentence or something. So it kind of keeps everything pretty above board if you sign a stat dec to say that you have withdrawn Bitcoin to this receiving address, and that all kind of matches up with the exchange trading account and with the withdraw receiving address, etc. Yeah, yes. That's interesting. It sounds like things are done a little bit differently between auditors, because my auditor was quite clear about he needs the public key belonging to the receiving address, probably because I didn't still have the Bitcoin in an exchange, and maybe because that's the way that auditor goes about things. I'm not sure if you're aware, but it's actually possible to sign a receiving address with a private key. That doesn't give away the private key, but it signs it with a verifiable and unforgeable signature, essentially, which would prove with beyond a shadow of a doubt that you actually have ownership of that Bitcoin. You have the private key. I think that's probably pretty sophisticated for most users of Bitcoin. And I would sort of hazard a guess it might be more sophisticated than what most auditors are sort of up to scratch with too. But it looks like, I would say in future, there's probably going to be multiple ways to prove that ownership.
Yes, that's an interesting point. We probably will, as you say, this is an emerging industry. We may update our process with like according to the changes of different weight of audit process.
I had a query about the audit process as well. Is it normal for an auditor to make a comment about believing that cryptocurrencies shouldn't be in self-managed superannuation funds, even though that's not a qualified report that they're making, more just an opinion or a comment in a management letter? Is that a normal thing?
We believe that, so the auditor should give opinion on the financial status and the compliance of the fund, but we don't. The auditor shouldn't give like advice on if the trustee should or should not invest in crypto in the fund. So I would say we don't have this. We don't show this opinion in our management letter. Yes. So.
That's good to know, because my auditor did. My auditor said he believes cryptocurrencies are incredibly volatile, and in his opinion, they do not deserve a place in self-managed superannuation funds, just right towards the end, but then also said everything else was completely compliant with the things that he's meant to be checking. So I found that quite interesting, and I thanked him for his free and unsolicited financial advice that he's probably not qualified to make. But it's good to know that. I think if you're dealing with a self-managed super fund administrator that specializes in cryptocurrency and, particularly Bitcoin in my case, you probably wouldn't be getting comments made like that. I guess that's the message I'm getting here as well.
Yeah. So as I said, the auditors normally have the flexibility on what kind of their opinion, even what kind of proof of document they would like to see when confirm certain investment in the self-managed super fund. So because we have large amount of self-managed super fund and that we manage have cryptos in their funds. So we think it's a very common thing when people invest crypto in their fund. So we don't have that opinion, as long as it's allowed in the compliance documents in the trustee and investment strategy, and it's allowed by the ATO. We think you can have the option to either invest it or not.
Absolutely, that makes sense. As long as it's all sort of in line with how the fund is set up and it's in line with like Australian laws and regulation. It's sort of, as you've said before as well, given it is a self-managed super fund, the whole benefit is the flexibility to invest in what the trustees would prefer to invest in, as long as it fits their the individual circumstances in regards to risk and diversification and so forth. Yeah, good point. Well, that's really most of the questions that I had for you, just in regards to the process of setting up, operating, and even that audit process towards the end of the year. We've answered all the questions that people had proposed to us specifically, and so thank you for that. Is there any other points that you think that we should have covered that we haven't, or anything else specifically on this sort of end of financial year reporting side of things or auditing side of things that we haven't covered yet?
So one thing I probably will add on about investing in crypto in your fund is like you need to consider the tax implications of trading crypto. So the fluctuation of value of crypto in your fund won't trigger any tax implications. But if you dispose or even swap the cryptos to other kind of coins, it will trigger the CGT, the capital gain tax. So which is taxed by 15% in the self-managed super fund. But if you have held the investment for over 12 months in your fund, so they will have a discount on the CGT. So that will be taxed at 10% in your fund.
That's a good point. I know some people also stake their, I guess this is possible with Bitcoin, but definitely other cryptocurrencies, they stake it. And by staking it, they would earn rewards, which could be paid daily, weekly, monthly. I assume those rewards would be a capital gains tax event as well, as the income is generated rather than when it's sold, if that makes sense.
Yes, that's absolutely right.
That's good. Good to know.
Yes.
Well, I guess that's all the questions that I had. I guess a question that I alluded to a little bit earlier is that, well, firstly, do you own any Bitcoin or cryptocurrencies? If you're willing to disclose that, of course.
I don't have a Bitcoin investment myself, but I'm definitely curious about this whole industry. I would say, you mentioned that the difference between Bitcoin and other cryptos. So because I work in the SMSF industry, I would say the price of Bitcoin, because people has been trading in Bitcoin for longer time than other cryptos, other coins, and the value of Bitcoin is in the open market. So that will give a simpler process for all the SMSF to in the year-end process to value their investment in the fund.
That's true. That's right. And I think people that are really into Bitcoin, which was the original, I guess people don't like calling it a cryptocurrency, but it pretty much is. Bitcoin was the original one. And since then, there's been many what's called either forks of it or people trying to develop a brand new one. I think there's something more like 20,000 other cryptocurrencies now. And the people that are really into Bitcoin, they see it as a new type of money. So they see it as something that's scarce, unforgeable, it's censorship resistant. It's completely decentralized in regards to how it's run. So that's it's kind of very difficult or near impossible to shut it down. There's also no central banks or government authorities that are controlling the supply of it, which is kind of the problem that Bitcoin is trying to fix in regards to the existing monetary system, having a lot of that, control supply inflation, which leads to price inflation, etc. This is the thesis of Bitcoin. How that differs from other cryptocurrencies is other cryptocurrencies are not trying to be money. They're usually trying to be something quite specific. So they have a very specific use case. So a lot of people see them as perhaps like a venture capitalist playground where we're trying to develop some new technology, kind of like looking for a problem and having a solution for it, but not quite finding that problem yet. And some of these other cryptocurrencies might actually do very well in the long run. They might discover a new problem that needs to be fixed. I guess where most Bitcoiners come at it is that we know that there's a problem with the money. I'm not sure if you agree with that, but this is where most Bitcoiners come at it from. So they see that Bitcoin is kind of fixing that problem, whereas a lot of the other, 20,000 cryptocurrencies, it's not clear what problem that they're trying to fix because they're not generally decentralized. They're not generally scarce. Some of them are easily forgeable or easily corrupted in a way, which means they're not going to be a good money. And I guess that's where most Bitcoiners think of it in terms of that very difference, is that Bitcoin is money and cryptocurrencies are kind of like stocks or shares, but without a lot of the regulation and transparency that comes with stocks and shares. I'm not sure if that helps at all in terms of a way to describe the two of them. There's a lot more to it than that. There's some very intelligent people that say if you've done about 1,000 hours of research into Bitcoin specifically, you start to scratch the surface in terms of what it is and what it solves. And I think it just makes it a bit easier as well for people to be able to focus on one rather than be waylaid by the 20,000 other options that they could possibly go with. Some of them are as new as having just started a couple of days ago, and some of them have a couple of years experience behind them. But I guess if you ever decide to get into it, I would say focus on Bitcoin first. And once you've done 1,000 hours, and once you and I have had more conversations about Bitcoin, if you want to dabble in other cryptocurrencies, which we call shitcoins, you can feel free to do it. But I'd love to talk to you more about Bitcoin if you ever go down that path. So hopefully with enough exposure to people investing in Bitcoin through self-managed superannuation funds, it piques your interest because it's a very interesting industry and a very interesting what we call like a rabbit hole to go down to kind of understand what Bitcoin is and what problems does it fix.
Yes. So from my personal view, I would say because Bitcoin has longer history and more stable background. So if I would like to invest in something in a crypto in a long term wise, I probably will choose Bitcoin. But many people would like to take the risk, and they are more risk tolerant. They probably will go for try the other cryptos.
Yes, you're absolutely right. And what we do at Hardblock is we focus on Bitcoin and we focus on what's called like dollar cost averaging or saving in Bitcoin. So although we have features where people can sell their Bitcoin, we normally suggest you buy and you hold and you set aside a small amount. You set aside like 1% of your salary or 5% or 10%, whatever your risk appetite is, and you just gradually accrue more and more. And that makes reporting requirements easier. That makes keeping track of things and securing it much easier as well. But as you say, we do have a lot of clients that say, why don't you sell other shitcoins or why don't you sell other cryptocurrencies, as they would probably actually say it, because their appetite for risk is a bit higher and they want to dabble in other things.
Yes.
Well, if you if you ever start going down the Bitcoin rabbit hole and you're ever keen to run past, ideas past someone or ask any questions, please reach out to me. I'm always happy to talk about those kind of things. And otherwise, thank you very much for kind of providing a bit of the nuance today and some technical details. I think this has demystified the whole process of like setting up, managing and auditing a self-managed super fund really well. So I appreciate that. Thank you.
Yeah, thank you very much too. Maybe as a disclosure that if anyone's interested in setting up their own SMSF, or even they already have an SMSF, they're welcome to browse our website at superannuationwarehouse.com.au. Basically, everything we just talked about, you can find the information on our website as well. We provide a very comprehensive and detailed website that you can find out most the info to manage your self-managed super fund. And you can always contact us from the website or our email and phone number as well.
Absolutely. I will link to the websites in the show notes as well. And they have been very helpful for myself too. There's a lot of good guides on there. And we've got our own walkthrough. So a lot of what I've talked about today is actually in an article, like a written document. So if people want to go back and check over that, that's already linked to the Self-Managed Superfund Warehouse website as well. So if people just see that article, they can already find Superannuation Warehouse from there. And if not, I'll chuck it in the description for this podcast episode as well.
Yeah, no problem.
Cool. Well, thanks again, Zoe. You enjoy the rest of your day. And if anyone's got any queries, reach out to Superannuation Warehouse, or you can reach out to Hardblock if it's specifically about Bitcoin or something in this podcast. Yeah, we're more than happy to help.
Okay. Thank you, Justin.
No worries. Thanks, everyone, for listening. And until next time.